Hello and welcome to the Startup Operator Podcast. I'm Roshan Karyapha. My guest today is Shruti Gandhi, who is a general partner at Array VC. Shruti has been an engineer and is extremely passionate about data and ML. Shruti invests in early stage deep tech and enterprise startups. And in this conversation, we spoke about the various nuances of that, what her sector thesis is in terms of investing in the space, how can enterprise founders iterate to find product market fit, and what makes these founders truly great. We also spoke about how VC itself is changing and why there's plenty to look forward to with the Indian startup ecosystem. This is a very interesting conversation and I'm sure you'll like it, so do stick around. Hey Shruti, welcome to the Startup Operator Podcast. Thank you so much for making the time.
Thanks for having me, Roshan.
Yeah, really looking forward to talking to you. Shruti, I thought a good place to start would be, your journey into venture capital and investing itself. I remember reading a tweet thread you put out some time back. So could you elaborate a little bit more?
It's pretty circuitous in many ways. It's many paths that are not were not obvious at the time. But quick summary of it now is I was an engineer for a decade. I was a founder, and now I've been in venture for a decade. And in the venture career, I started my own venture firm about 6 years ago now. So been doing a lot of tech things as a general category. Have early education in computer science, and then switched, I would say, on the more entrepreneurship, finance, and other side maybe later, but still use my tech background into making that journey happen.
Right. So that's something I want to pick up on, right? So you're an engineer and you're, passionate about data and ML and all of those things. You're fairly technical. So what advantages do you get from that background in your current role?
Yeah, I think in terms of advantages, I would say that I invest in the things I know well, which is AI, ML, data, enterprise SaaS, and when you are investing, it's faster to get to conviction, and it's also easier to get access to founders who know that they're looking for that kind of investor. Um, because there's a lot of money out there, but getting money from the right kind of folks who understand your space is very hard. And so that universe of people is a small group of people, and that's why that I would say is a great advantage for folks with that background to invest in those kinds of companies.
Right. I guess, having someone relate to whatever you're pitching makes a huge difference, I would say, right? Because a lot of this deep tech and enterprise stuff is very contextual as well. It's not as simple as, let's say, a consumer internet use case.
Yeah,
Yeah.
it's the fun part is like when I'm getting a demo for the pitch, I founders often go like, "Oh, because look, it's been fun so far, like, and you get what I'm doing. Let me show you this secretive thing I'm working on. It's not fully polished. It's not secret, but it's more just like I don't feel comfortable sharing this with everyone, but you get it." So, and that's when I know like I'm gonna have a great relationship with that team as well. And I love, and that's the advantage of having that background. So it it feels like it's different careers over the years, but it's actually like a building of all of it together to be where I am today. Yeah.
Right. And also, it's quite a crossover, right, from the whole deep tech world into like, whether it's marketing or sales or founder stuff broadly. And I think, anyone who can kind of help bridge that distance is super valuable for a founder. Yeah.
Yeah, I think so. That's how I position it as well. Like our fund focuses a lot on go to market, and I say that very few people have the background to focus on technical go to market, and also found empathy all together because I've done it all, and I'm building a firm from brick by brick, bottom up. So I also go through the founder journey with the founders every day, um, and that's why oftentimes founders like working with us as well, because it's I'm not just telling them what to do, I'm doing it with them, which is important.
Right. Okay, let's talk about Array VC itself. I think it's a pretty cool name. What is your thesis at the fund, and if you could elaborate a little more on that.
Yeah, Ray invests in enterprise companies with, we like being the first check, but enterprise means companies that focus on data, AI, ML, and a little bit of like what I would like, extra things like hardware around it, or but SaaS, but it's under the umbrella of B2B enterprise data SaaS. And I'm excited about continuing to invest in that category because, as you said, there are not many people who understand tech. And you can easily invest in applications and consumer products. But for us, we have the way we look at it, the stack of tech is the infrastructure layer, the middle layer, and then the application layer. So I invest all across it on the B2B side, but I am very excited about the infrastructure and the middle layer of tech. And some may call it platforms, some may call it many other things. So that's what I like to invest in, but we also do a lot of application investments.
Right. And what are the typical challenges that you notice in that space, and any opportunities that you're excited about?
In which space?
In the infrastructure or you could even talk about the enterprise SaaS space.
Yeah, I think the the challenges often are how fast you grow and not having enough knowledge around how to what fast means sometimes. um yes, here's a funny thing: most people know how to get to IPO, at least in terms of what they dream about, and they have data and metrics around it that it took Salesforce so many years to go public, it took Square so many years to go public. They have the data, but when you're in it, it is super hard to work backwards and say, well, if it's 10 years, year one needs to be so and so milestone. Because when you're building the company, you get so involved in the day to day, and it is hard. It is so hard to get any one customer to sign up with you. It's so hard to sell, that it kind of feels like whatever I'm doing is so enough. That scale seems like not a thing you end up tremendously focusing on, because you end up focusing on product and getting to the get just climbing out of like the initial debt you have to pay to build a company. So that's, I would say, is like a very hard thing as a founder to work on. And I respect anyone who decides to go this route and decides to tackle it all together.
Yeah, no, that's a great point. I think these guys typically have longer gestation periods, right? I mean, they can't really iterate as fast, or they can't really collapse those iterations as much as, let's say, a consumer or an application level company can. And a lot of the times, these guys are building all of the technologies grounds up as well, right? So. I wonder how you balance, this whole build everything from scratch, let's, reinvent everything mindset that some of these folks would have, with the, get to market first, validate, find your customers, and then build with the customer sort of a mindset that they might have to adopt.
I think founders actually do a pretty good job these days of doing that in advance. I would say what that means is you are not, because oftentimes founders in this category are already getting paid really well at their current jobs. And so for them to have that conviction to go leave those jobs and sacrifice, many other things, it does make them go validate the ideas sooner. And so that's one perspective. The other perspective is oftentimes founders with that background will come and say, I'm doing this, and they're all off on their go-to-market anyway, which is okay for us because we like helping founders figure that out. And for us, it's not that doesn't scare us. We focus on what we call the 0 to 1 to 10 journey. And it's, if the founders are coming and telling me I've worked in this category and I'm going to work in this category, and here's what I'm going to do, but they're a little bit off, we basically are okay. I'm very transparent with the founders and say this is not the go-to-market you're going to eventually succeed with. But they're not coming in and saying, oh, well, I'm going to go start an e-commerce company. My background's in security, but I'm going to go start an e-commerce company. That's like a no-no for us, right? If it's a background's in security and I'm starting in something, this is my insight into security and what we're going to solve, we're all excited about that.
Right. And we're starting to see a lot of successes in the deep tech enterprise sort of domain, right? I mean, we had Nutanix, and then there is closer here. I mean, we have the likes of Dhruva, for example, which raised a bunch of money recently. Then we have Postman and Hasura and all of these folks. Is there any significant trend or milestone that has happened in the last 5-10 years that's kind of accelerated all of this progress?
Yes, great question. I think our thesis is that the future of enterprise is intelligence, and intelligent enterprises need to have data, AI, ML to get there. And big, we believe software will be free and in the future. And for you to have that mindset, what we mean by that is you need to actually start building automation and intelligence to charge that you can charge for. But plain software with workflow is just going to be free. And so, having said that, the biggest shifts that are happening today are in the market, where companies over the last 10 years have gathered data, but they have not really been able to do a lot with that data. A lot of companies are still in the early days of their AI ML path. And so that's one that's creating this crazy momentum. And as you saw in the last year, that tech kind of overtook a lot of this. And intelligent tech companies, that were killing it in the market were companies that were doing very hard tech things like the Twilios and the Snowflakes and so forth of the world. So what the world is realizing is that we need to get there, but we need our enterprise stack to be modern to be able to handle that. So that's the second trend, right? The third thing is talent doesn't want to go there. Talent coming out of good schools today doesn't want to go at these kinds of places that is not tech ahead. So they're starting a company or joining a startup, and that three of those things is kind of making it all come together to come to a point. These massive trends are bringing it together for you to say, you need to, tomorrow's enterprise is going to be smart, and it's going to take advantage of data, and you will need that talent, the data engineers, the data scientists, full stack engineers, everyone, to be able to kind of build that intelligent enterprise. So that's what's happening today. And those are the kinds of companies that will survive in the next 10 years, and everything else will be dead.
Yeah, and when one talks about data and ML or AI, the possibilities are immense, right? Literally everything that we do in our lives could be smarter, better, of course. But oftentimes I find finding relevant use cases that people would actually put money on the line for is not a trivial thing. Making a business case, even internally for an organization to employ all of this, the data science and whatever, set up a data science function, or maybe use X tool or Y technology, is not a trivial thing, right? So any advice on what founders could do to sort of find that relevant business use case and also make it a priority for the organizations they're selling to?
The thing is, these organizations that don't find the time and bandwidth to get to this stage are going to die, or they're going to suffer, right? Like, they're not going to die overnight, but it's going to be the fate of the Kodaks of the world, right? Like, where those companies saw movement in the digital photo camera world, and they stuck to wherever they were, right? And so that's the future of a lot of these companies that don't find so you can't blame the founders for those companies and organizations to not wanting to adapt um, AI, ML, and intelligence. But what the founders should do is get a lot of traction with companies that are open to, uh, those kinds of transformations. And there are many big tech companies like the Walmart and Coke and Pepsi and many others are open to those kinds of transformations. They have smart CIOs who are willing and listening and trying to stay ahead. So I just think founders have to go find those those platforms early or bigger companies to be able to start get accelerating their journey. Uh, and that just means you have to knock on more doors. And you can't fight people that are not ready. So you have to catch them at the right cycle. You cannot fight people. I mean, that's a philosophy in life I personally have. You cannot convince people to do something they they're not ready for. And oftentimes you may convince them and you may not be the person they go with you anyway, because then something else looks attractive. It's about catching people and customers in the right frame of mind with the right budgets that they've allocated to these projects. And that requires a lot of hunting, which is hard. As founders, you're already busy building your product, but now you have to go hunt for these kinds of customers and find them exactly at the right time. It's like catching lightning in a bottle. It's really hard,
Yeah.
and many people do it.
Yeah, I guess I mean it's about defining a tighter ICP in some sense, right? And then going after them and sort of building for that audience rather.
Well,
Yeah.
that's many ways to how you implement it is a different thing. How you go about finding those customers is, there's many ways to do it. But yes, you're right. Defining it, putting it out there, contacting your network, creating content around it, basically being in front of the customers at all times, so such that when they're ready to make that decision into that transformation, you are on top of mind. But again, that how, there's many ways to go do the how, and that's when some companies excel and do it really well over others.
Right. And a lot of cases, when you're deploying such enterprise tech or, something which is fundamental to a company, right? I mean, there's a lot of change transformation involved and, it's a lot of tinkering with their core systems and whatnot. And people are resistant to that change and there's a lot of inertia and there's friction, right? Any words of advice on, how to sort of smoothen this whole experience and nudge people into, helping you out on this deployment and stuff?
Well, that's a good question. I like founders that start small and they're solving that one pain point that people would be willing to experiment with. That's all you can wish for when you're small. Don't tackle everything. Don't try to build horizontal plays. Go solve small problems. So then I believe that smart founders will go expand into larger categories down the road because they can figure it out down the road. But initially, you can't go to a big company and say, you have to rip everything off for my product to work. And then you have a beautiful solution, because no one cares about that. So I think that's a good question. And it's really hard to, as a early founder with big dream and vision, to go and say, I'm going to just do this one thing well first, and then go from there to solving like the big thing. But you have to start small. Like, go find the pain point that 10 people will want to try it out right now, and they would pay even little amount of money for. But as long as you can plan out from there what you would upsell them to, I think that's a good playbook to that a lot of people are using and are successful with.
Right. It almost seems intuitive to sort of verticalize, right? In that sense, I mean, maybe build for a specific industry or specific use case only, right? Where you could work with three or four or 10 of these prospects and quickly learn and sort of build something that's the gold standard for that particular use case or industry, right?
Exactly. Exactly.
Right.
I mean, that's a non-horizontal approach, right?
Yeah.
So pick a vertical, but know that you will have to enter other verticals
Yeah.
at year 3, 4 onwards.
Right. Go narrow and then go wide, basically.
Yeah.
Yeah. Uh, Or at any portfolio companies that you would like to talk about, and maybe mention their journey and, some key inflection points in their experience and so on?
Um, well, I mean, there are so many. All my babies, it's like I can't. It's hard to pick one. Um, but we'll talk about one that just 2 days ago announced their Series B, and I was one of their early investors. It's a company called Placer.ai. They do foot traffic management insights, basically. So they started out, wanting to do this, and they had done that for the Israeli army, and then but now they're becoming a core part of the. So they started small. They started out with some verticals, like maybe potentially real estate might want it, and maybe hedge funds want it, but now it's becoming a core part of the stack. um People may like the one of the crazy stories I heard was uh someone in the prop tech world said, like, companies are suffering last year, especially retail and all those guys, companies are suffering, but the one solution that they thought that they should pay for is Placer, because it actually helped them grow their business. And so that's an insightful, amazing thing. Like, I think that this is like, they started in 20, I believe 2017. So since, since then, like just year four, to be able to just be core part of a stack that in lots of different business verticals, is a phenomenal success. Even as a founder, even if it's early. So yeah, so since then, when they basically had nothing, was when we were a large investor, supporter, and then now they've raised a Series B of about $50 million. So I feel pretty good about something like that.
Nice. So, as an early stage VC, you work with a lot of founders, and I think founder conviction at that stage is a lot more important, I would say, right? I don't know who said it, product market founder fit, right? I mean, that's really what you're looking at. So, from your experience of working so closely with founders, what makes the truly great founders great?
Um, the ability to want to sell all the time, because I believe that they can build. Um, that's the kind of founder we invest in anyway. The ones that can build and have demonstrated they can build in the past. But the ones that can sell are hard to find. And there is no data around that because they haven't had the sales jobs in the past. So, I believe founders have three jobs, main jobs, I would say, and in the sales category. One is selling to your customers, which is obvious. Second is selling to hires to join your company in the early days. Is the hardest thing to do when people with these skill sets are getting paid well somewhere else. It's hard for you to convince them to come to a platform early for low salary and take high risks, and show that vision of why they should join your company. And then the third is selling to fundraise, and that again is very hard to do because it's not natural to a lot of people to play the fundraising game, if you will. um, and yeah, and so those are the things I look for oftentimes, that are the founders able to demonstrate that they can do that well, in
Right.
addition to many other things, right?
Yeah. No, it's a superpower, right? I mean, if you can build and sell both, right? And oftentimes the builders tend to be problem solvers, and they fall too much in love with the problem, and really don't work with the market as such, right? So, we spoke briefly about early stage funding itself. I mean, it's grown tremendously over the years in both Indian and like the US ecosystem as well. And in some ways, capital itself has become commoditized, right? I mean, there are plenty of people who write an early stage check these days, and it's only growing every year. So, what is the differentiation that you strive to add beyond capital itself, right? Are you working to build some institutional knowledge, have these mentor connects or founder connects, and other resources and so on?
Yeah, so we call it the 0 to 1 to 10 journey, which is very rare. We help our founders get to Series A, basically, and everything required to get to that, which includes intro, which includes um, our value add, which is around the positioning, marketing, sales playbooks, and those have worked really well for us. We've done it. 75% of our companies have raised great follow-on rounds from all the top funds, such as Excel and Norvest and IBP and Founders Fund and others. So, that is our value add, and that is how we, as I said, there's a lot of money out there, as you said it too. And what we like to do is roll up our sleeves and work with the founders and act as an extension of their BD team and figure out what they would need to get to that next stage. And we don't claim to be experts at the 100 million journey. We help you get off from the 0 to 1 to 10 stage.
Right. Okay. The venture industry itself is like under a lot of flux and disruption, right? I mean, every day you hear of different models being evolved, like solo GPs and rolling funds and whatnot. Any thoughts on, how things are changing and what we'd see in the future, maybe 5 or 10 years down the line in the venture industry itself?
That's a good question. It's definitely going to be more diverse. It's definitely going to have more women. I'm pretty confident of that. And the patterns are going to be different. In the last few decades, the pattern has been, the Stanford dropout in early 20s eating ramen that we want to back. And we've seen as a world in the last few years that mega companies have come out of everywhere in the world. And also the founders don't look like the 23-year-old Stanford dropout only. So definitely new patterns will evolve, and the founders and the funders, VCs that actually can evolve with those patterns are going to be the best VCs that build a legacy firm over just a few funds, which is what's going to happen. A lot of people will realize it's a lot of hard work.
Mm-hmm.
It's easy to raise the first fund and feel like it's a job where you just kind of go and deploy money and that's about it. But people who've already made money will find it to be a lot of work for very little salaries early days. And so they're going to just kind of not do it. So many of these funds that are started in the last few years won't come back for maybe second, third, or fourth funds, because it's just going to be not something they're excited about. Because a lot of times people enter VC after they've felt like they've made money in their operating jobs and they could raise capital after that. But if they've already made money and they realize it's a lot of hard work and the payoff is not immediate, it takes forever to see returns and things like that. So they're just gonna not want to do it. So there's gonna be either a lot of flux of managers going in and out, or consolidation. They'll join larger funds, or people will merge. So the LPs have to start using different formula to start figuring out what kind of VCs they're going to back and what they're looking for.
Okay, interesting. Final question, and this has been a fascinating conversation. Thank you again. From the outside, and when you look at the Indian startup ecosystem, what do you see? Any thoughts on how the Indian startup ecosystem itself is growing? What are some opportunities and challenges that you see in the ecosystem?
When I came to India when I was starting my fund 5-6 years ago, I was saying I wanted to start an enterprise fund. Everyone was like, "Oh, well, India is a consumer country." We are, at that time, Flipkarts of the world were big, and people were doubling down on just the consumer world. Things have since changed, and more people are interested in enterprise. Um, there are like a lot more funds that have started in the enterprise world. The thing that is still unclear on is how SaaS works in India. And I think you can do an enterprise deployment for now, but not SaaS because there is a too little regulation around that. So there's a lot of churn. People may just stop paying. You know, it's not guaranteed. SaaS is not, you cannot model SaaS well just in India yet. And that's a piece that needs to be figured out. But it will. I think one way to tackle that is not do SaaS just yet, but do like upfront enterprise deployments.
Right.
And then see how SaaS may work out with certain customers that are repeatable and can be relied on.
Right. Now, I have a slight contra opinion to that.
Sure,
So,
yeah.
uh,
Here.
I,
Not an
I,
expert in the market.
right, sure. No, I understand where you're coming from. I feel like, the B2B SaaS wave is sort of underrated. I think we're slightly, behind the curve in that sense. And I really think that's the third sort of wave in the Indian ecosystem. The first, if you look at the dot-coms of Naukri and Just Dial and all of those folks, and then consumer internet, as you mentioned, Flipkart and Ola and all of those guys. And I think now B2B SaaS will be front and center. Just the last week alone, I mean, we saw like Series C, was it, or Series D, growth stage funding for about three companies, ChargeBee and Whatfix and Dhruva and so on. And I think B2B SaaS is a very exciting space for us to be. And also typically, I think India has had that base of ID talent, a lot of these big services firms and whatnot, and we haven't done the pivot well to products, right? From services to product. I feel like there's a lot of convergence on trends right now, whether it's the cloud or whether it's like payment through cards and whatnot. That we're very well positioned to capture that SaaS wave, I feel.
Yeah. I'm not. Let me be clear. I think companies coming out of India versus customers in India is two separate things.
Yeah, that's right.
So
Yeah.
companies coming out of India are still getting a majority of their customer base outside of India.
Yeah. Yeah,
And
they're
I
building.
that's been particularly in
Yeah.
many Indian companies that have come out of India,
Yeah.
but sell to global customers.
Yeah.
That's a big wave.
Yeah.
What I was commenting on was customers in the Indian ecosystem and the reliability issue around that.
Yeah.
And which will just come around on its own down the road, as you said, because of the big trends around cloud and so forth. But I was just commenting that is something to be fixed first.
No, that's absolutely right. That's absolutely right. I think Indian customers are still less mature, right? I mean, they're still catching on in that sense. So a lot of the SaaS companies just choose to be global from day zero, right? And of course, I mean, you would rather get paid in dollars, right? So yeah,
Right. Yeah. So I think that's why the ChargeBees of the world are actually doing well, because
exactly.
customers are here in
Yeah.
the US and everywhere else.
Yeah.
But I meant more like just the self-sustaining ecosystem in India itself is going to take a little while, because as you said, people are still used to wanting and extracting more value
Mm-hmm.
than the, because as you said, there's talent.
Mm-hmm.
So oftentimes Indian companies are still going through a decision of, should I just build everything on my own? And they're going to come around wanting to realize that that's actually a bad idea down the road. But that's a phase India is in right now, where why should I pay SaaS fees for like 55 products when I can build them all?
Yeah. No, that's absolutely right. In fact, I mean, that's something that I've run into plenty of times as well. I don't know if they're very comfortable with the PUPM model yet, right? I mean, typically in India, you just throw people at the problem, right? So, you just say that, hey, I mean, why do you send 10 of your engineers to sit in my office and solve this for me, right? Yeah, that's actually pretty interesting. Yeah. Cool. So Shruti, thank you again for being on the podcast. It was fun talking to you, and a lot of insights in here, and certainly stuff that I'll be reflecting upon myself. So thank you again, and all the best for everything that you have planned, in the future.
Well, thank you for having me, and this was a very insightful, deep podcast. So I'm excited to be a guest here and see what the guests think.
Awesome. Thank you so much for listening. If you liked this episode, then don't forget to subscribe to us on your favorite platform and share this episode with all of your fellow startup operators. Also, follow the Startup Operator on LinkedIn and Twitter for more updates. Stay safe, take care, and see you soon on a brand new episode of the Startup Operator.